Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the Australian dollar took a stab at the trend line, as you can see here, at 70.85. After briefly inking a 70.75 low, the market rebounded. I still feel from a technical point that the midway of the RSI at 50 has been broken, and also we're just getting a weak sell signal from the MACD. I feel that if we get a close under 70.80 or 85, that it would reinstate the downside to a target of 69 cents, with the resistance seen at the moment at 71.55. It would seem that some of these markets all did take a challenge at key levels, starting with the euro as well. We can see that the market took a stab at 116.85, close to there, and was respected. And from that is that still poses a threat to the downside, but lacking technical support to increase the potential fall, though. I do feel that we need further indication of this market to sell off and see an increase in US dollar demand, which does measure the greenback strength against a basket of 6 major currencies, and the euro weighted at 57.6. A close under 116.85 would give us the next target of around 114.5. So yes, it is quite a big drop, so do keep an eye on this level, but at the moment we're just testing the parameters of these two ranges of 116.85 to 119 the figure. Nevertheless, there's no trend from the bull case anymore, and also just waiting for that confirmation. Since the rebound of 104 on the bullish outside range day, further rise or further indication to the upside is seen given from the technicals as the MACD climbs, and also the RSI breaking through the midway point does give me a potential target of 107. That is a measured move given from this outside bull candle, and therefore could see profit taking coming back towards that top side of the range, anywhere from 107 to about 107.25. The pound, well, since the gravestone doji, we were waiting for confirmation. Now, we did get that confirmation from the break of 130.30, but it closed above there and didn't quite confirm the negative candle. However, still keep an eye on this level, as a close of New York tomorrow at 7 a.m. would give us indication that the market is breaking down if we are beneath 130.30, and therefore would give us a further target of 127.5. Wait for the close and the confirmation, because the technicals are lacking the bear case, and we do need more support coming from the candles to influence the move. Little to say from dollar CAD since the rebound and close at 133 level. Nevertheless, I feel from this candle, although it's an free inside range days, is that we are waiting for the next move up, and that should be up to 135 to 136 possibly, but at least 135.5, and reassess from there. Keep an eye on gold. There is a bit of bearish divergence from the spinning top. We've got a hanging man, and the hanging man posted last night. Not the strongest from the previous, but last night was clearly a hanging man, and therefore could see further risk to the downside. Now, a break of 1,955 should see the move to 1,900. And if it all comes from there, a break beneath 1,900 gives me a target around 1,820. But wait for the break. But the bearish divergence is concerning, so therefore I am not bullish at these levels. Finishing up with oil, well, I'm still calling $36 a barrel, even though it's very, very slow and very, very long drawn out, or more lackluster, as the price action is still not giving away too much to the upside and lacking to the downside as we go sideways. Nevertheless, the technicals are in favor of a pullback, and with the MACD remain negative for some time now. Let's see if the market does eventually follow through to the called target of 36. Unless we get a break above $42 a barrel, then the bears should be in focus to that support that I've been calling, which is around 36. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. Maybe enjoy the great start to this new day.